Firstly, let's speak a bit about the past week, and let's have a look at dynamics of the Forex measures. We can see that such pairs as Euro dollar, British pound, US dollar, dollar yen, dollar franc produced very little dynamics. Here we compare the opening price of the last week and the closing price, and the changes were very minor. From Forex measures, only Australian dollar, US dollar showed some movement, but just around of 0.5%, which is not much. We saw that market players were trying to evaluate the new kind of economic factors and economic drivers they have to deal with. Also, practically all major currency pairs are at some important levels, and for now these pairs are kind of shy to break these levels. So we see a price action which is limited by fundamental uncertainty and strong technical levels. This is the kind of framework we have to operate right now in the Forex market. I have also put gold here to compare with the move of currencies, and we can see that the metal made a significant movement in comparison with major currencies. It actually lost more than 1.5 percentage point. So this is explained by change in the market's risk sentiment and the fact that gold was more sensitive than currencies to that. Next, we come to analyzing CFTC data, or Commodity Futures Trading Commission figures. I'd like to remind you that these figures are released every Friday, and they cover the data for the week which ended at Tuesday. So here we can see the figures for the week which ended on Tuesday, September 27th. Of course, there is a time lag in these figures, but still they represent information about how big players, big money, big currency speculators are positioned, and this knowledge can help us in our trade as well. You can see that the overall bullish position for the US dollar, the net position, has increased after the Federal Reserve's meeting, and this confirms our idea that the decline of American currency after the initial disappointment that the Federal Reserve didn't raise interest rate in September on September 21st meeting. This disappointment wasn't a big negative factor for the US dollar because frankly, very little number of market players really expected the Fed to act in September. So large speculators, as we can see here, continued increasing their dollar bullish positions. The reason is that still the market expects the Fed to increase interest rates in December. And if we look at other major currencies, they currently don't provide a very good alternative to the greenback. And we'll speak a bit later about why it happens. If we look at other currencies here in the table on the right, we can see that bearish positions for the euro decreased a bit, while bearish positioning in British pound increased rather sizably. The weekly change is more than $2,000 million, so it is rather significant change. And this is the reason to believe that the British pound will remain under pressure in the coming weeks, despite the short positioning which already exists. It seems that traders and speculators don't believe that any sizable recovery is going to take place in GBP USD and in other pairs involving British pound. Sorry. Also, we saw increase in bullish positioning on Japanese yen. This is a natural thing because of the current risk aversion mood the market is in. But on the contrary, Australian dollar bullish positions also increased a bit, not to a very high extent though. Here we can see a reflection of some optimism due to the situation in commodities, where commodity prices do behave in a rather stable fashion. So, to sum up the information we have from CFTC, I should say that the potential of these currencies versus the US dollar is very, very different. So for every pair, we have its own fundamental reasons, and the approach to every currency pair should be unique, should be different. We now can't make any groups like commodity pairs and say that these commodity pairs, this group will perform good versus the US dollar. Because if we take the commodity currencies one by one, the situation with them is different. And so is with the so-called refuge currencies or safe haven currencies like Japanese yen and Swiss franc. The picture looks kind of different for these currencies.